Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for a very weird day today. It is Wednesday. It is the 2nd of June, 2021, around 6:55. The action had to be in the stock market. Did you see AMC? It went up nearly 100%. I'm cracking up at some of these moves that go on with this. I thought that company that bought the stock 2 days ago did great by making 26%. They left on the table more than they made. So what? The name of the game is taking that slice out of the middle. Now, for you financial market traders, of which that's my favorite complex, whoa. We start with all the heavy-duty data tomorrow. We've got all kinds of jobs data coming out. ADP, Challenger numbers. We've got the ISM numbers coming out. We've got certain price indices coming out. There's just a lot. It's all morning long. And then we get to Friday morning's all-important jobs data report, and we'll see if there's revisions to that 266,000 number. There's a whisper number out there of 600,000. We'll see if it jumps that much. Who knows? And from there, we'll have an idea what the Fed wants to do. Now, the Fed Beige Book did come out today, and I've written a lot about it for tonight's update, so I'm not going to discuss it in detail here. I went through all the key points and the highlights. I write like it's a old-time Reader's Digest. I give you the headline, all the bullet points for what you have, short synopsis, and then move on. That's what my traders want. They're not interested in all the facts and fundamentals they don't get anyways. You get to the point, is it bullish, is it bearish, what does it mean? And simply put, it's going to be mind-boggling for the next 48 hours. Now, a lot of traders also aren't paying attention to some of the corrections that have gone on. You know, all you hear about is lumber, cement prices. Well, people don't realize lumber's down about 28% from its peak. That's a pretty hefty decline. That doesn't mean it's going to continue to decline, but it's if you will, corrected. Copper market, you know, this was a 480 market. That's 30 cents ago almost. So this market was in the 480s, boom, right back down. They're giving you corrections. Now the question is the economy ready to rev up? I can tell you, living in a big city like Chicago, we are revving up. Try to get a dinner reservation. Everything's a mob scene. Minimums to get in. Nice steakhouses. If you're not, when you make the reservation, they're telling you got to pay $100 a person to just get the reservation. If you got a table of 6 or something, they're getting outrageous prices because there's so much demand. The staffing is down, the city's just opening, and the weather is gorgeous. And all the parts are opening. All the big hotels, everything's reopening. So knock on wood, we're getting out of all that. But let's go to the marketplace. As you can see, you're drifting. Not uncommon as you've got your big-time jobs data report. We've all been waiting 3 weeks, 4 weeks for this, and now it's here. Is the market going to be able to accelerate for there, or do we set in a correction? I don't know. I want to see the numbers. I've written in my reports what a number under what I think, what a number under 500,000 and 400,000 is. That's, to me, is the low points. Over 600,000, what I think it does. Will there or won't there be a revision upward? God forbid there's a downward revision. That would be terrible. We're going to find out. All we heard about in the Fed Beige Book, employment constraints. Are people coming back? But as I said, 25 states already stopping that program as of June 10th with the government. So you're going to see in those states, people want their jobs. They're going to lose $1,200 a month minimum. All right. So as we look at all this, you can see you're drifting. As you look right here, the story's still laid out. What if I told you that we still haven't since May taken out this peak or that? Within a 4 or 5 day period, we peaked out, made a bottom, and we've hung in there now for the better part of a full month of trading. It's like a congestion area that the market has. As for the trend up, market's got higher lows, higher highs. You can't argue that part of it. Where's the market? It hasn't even come back to the 18-day average, and it can't afford to right now. If it did, you'd break the pattern of higher highs, higher lows. So if it's going to go, You don't want to see these lows of 4 days ago taken out. And if it rallies, I'm looking at 42.45, which would be over the May highs. So interesting time at Ridgemont High, right? That's what it is. And you watch this. You're overbought. So you have an overbought market in an uptrend, in a stall area, hard, with all kinds of economic data coming out right in front of you. The NASDAQ is going neutral in terms of it's got a higher high and lower low, but what about embedding? So we cannot count the Thursday trade. So let's get rid of that. Both numbers were over 80 on the close Wednesday. They were not the day before, the day before. You're overbought. So when you look at that, always count where you're at. You're just plain overbought, drifting here just like I showed you. In the Dow, overbought in an uptrend. Will you be able to get up and over these highs or not? Are you going to fail against the upper Bollinger Band? Any moves that get you back under 34,408 will look temporarily negative, and a close under 34,248 throws downside bias into the market. The Russell is the strength. Why? A lot of people have different reasons as to why the small caps are making their move all of a sudden. They think they're better positioned to take advantage of coming out of the COVID. Are we embedded? You cannot count Thursday because we don't know where we'll close today. You go back to Wednesday, both over 80, not the day before. Getting the picture? Overbought, trying to lock in embedded readings. And if they do, this could all become a base in all these markets that we're looking at, and that could set you up to a whole new level into a summer run. Don't know what's going to happen with this jobs data. After that, while we get the FOMC meeting, I think this jobs report sets the tone for what the Fed's going to do. I think by Friday we have a pretty good handle on what things are going to look like. In the VIX cash, you still have an embedded reading. Is that bullish or bearish? It's bearish as can be. So I think the pros are selling short. And I think they're looking to get to the lower band where I think they'll cover those shorts. That's what I'm thinking can happen there. SEP bonds, mixture market. The trend is down on the swing line because you're over the red line, which is the 18-day average of closes. I define bias as the market over or under that number. It's up. Trend down, bias up, market cancels out the two, and you're overbought. Rough market to try to figure. What about the 10-year notes? Well, the 10-year is a different story. It's bullish. Higher lows, higher highs, caught in the sideways action, overbought. There's your dilemma too. Dollar index, look at the battle. It's the 18-day average of closes. What do we have here? Well, you just opened. That's why you jumped like that. But you have higher lows. If you take out today, Wednesday's low, and Wednesday's low in the market was 89.85 and a half. So if that is taken out, it's only 5 ticks away right now. That will give you lower highs, but not lower lows. You got higher lows and then lower highs. A difficult son of a gun to trade. In the eurocurrency, you have a pattern of lower highs, lower lows, and you're refusing to give the downside bias the go-ahead to get short at this point. Momentum's trying to turn down, but without getting that close under 121.87, the market hangs in there. Very, very hard chart. British pound fell back finally to the 18-day average, looking for what to do next. The pattern is not a trend. You have a lower low, higher high, fell back to the support, momentum still pointing down. Bitcoin, do you sell a market that is this oversold? I can tell you what I tell people, no. The market is marking time. Do you attract new sellers when you stay oversold? It's rare. When you embed, that's different, but you're not doing that at this point in time. So you put it together, and these are not easy market times. Then we see that there's going to be talks on the Iranian situation again next Thursday, a week from tomorrow. So what? The Iranians have already told us that until they have their presidential election, what do they want to do? Nothing. Okay, so you got a higher high, lower low. You can see the differential here is just sort of sitting, But oil itself is staying up. We saw OPEC has said that they're going to increase production by that, 600, 700,000 barrels a day this month and in July. And then they'll decide what they're going to do next. That won't be with Iranian oil on the market. So as the world, it's not just the United States, as the world gets back to normal, you're getting more and more demand. The same thing here in this part. Trend up, bias up, but you're not getting an opportunity as the market's just hanging in at the upper Bollinger Band and not embedded. That's also important. And gasoline. Gasoline prices in the U.S. are making, 6-year highs? They've been coming up, and I told you, you don't want to play that game on the first move. Now, it'll be interesting in nat gas. We're getting our first real big heat wave. You often get the traders going, oh, that's going to create all the demand. But the seasonals then kick into the bear side. I know it sounds funny, but that's what it does. So you got to have some experience with these markets. And when you get that experience, well, you become a broker. And our brokers work with our clients. Not everybody wants to be self-directed. People want to talk. They want an opinion. They want somebody to call them and say, hey, this is that number you were looking for. Here's what the chart action looks like. Let me send you that chart. Boom, you got it in your hands. You're making a decision with someone. If that sounds like something you want, we have them. The brokers I have all been trained by me. So they're very versed in my course. My course is my technique. They do their own thing. They should. But if you ask them, what is Ira saying to do here? What's that? They're going to work right with you like you were working with me. These are interesting people. And as I said, been with me a long time. Commission, they'll work with you to the size of your account, the needs you want, the amount of time they have to put in. What could be fair? Brokerage is not free in the futures business. There's no pay for the order. I don't know if you're aware of that, but there isn't. So, if this sounds like something that might be of interest to you, it's a simple phone call. They won't bite. If we don't pick up the phone because it's the evening, don't worry about it. Leave a voicemail. We will call you right back. I get most of the voicemails and I disperse them through the company. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.